Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Monday the 16th of September 2013. Well, it's the start of one of the most important weeks of the year for financial assets. Remember, we've got that big FOMC meeting coming up on Wednesday when we will find out if the Fed does indeed begin tapering. But to get us started off to a very volatile fashion, there was more news about the Fed on Sunday when Larry Summers, he was the former treasurer in the US, he withdrew from the race to be the Fed governor, which really leaves the current vice chair, Janet Yellen, is a real shoo-in for this position as the new Fed governor. Interestingly enough, Yellen very much considered the absolute. Now, obviously, Summers also has dovish credentials, but the way the market is reacting to this news about Summers withdrawing and of Yellen being the front runner really suggests that they do see Summers, or they did see Summers as being slightly more hawkish version. So what we've seen. Treasury yields also falling lower, and that drop in Treasury yields has really massive boon to stock markets globally and also to emerging markets, to the risky end of FX. Now let's take a quick look. Remember, whenever you look at Fed policy, you got to look at dollar yen. Let's take a look at the daily chart here. As you can see, a sharp sell-off. We were above 100 last week. Well, we've fallen back below 99, but we are finding a bit of cushioning between 98.70 to 99.05. That's the 50 and 100-day moving averages for the dollar yen. They're very, very key, very significant level, which we think will cushion the downside. Any move towards 98.70 to 60 to 70 could really just pick up or just cushion the downside. We might get a bit of profit taking. Some people just picking up on the dip there as well ahead of that FOMC meeting. Because obviously if the Fed does taper, then that could boost dollar yen. We would expect dollar yen to be very, very sensitive. But for now, the fact that Treasury yields have declined, they are back below 2.8%. That is weighing on dollar yen, and we would expect it to stay fairly muted, but with kind of a slightly bearish bias as we lead into that FOMC meeting. Because remember, if Yellen is the head of the Fed, or the Fed governor changes in January as we expect, and Yellen becomes that new governor, then what happens on Wednesday may not pan out. It may not be the prototype or the blueprint for the future directions of the Fed, because obviously under a new governor they may have new ideas. Now, we also have some news out of Germany. Remember, it's federal elections there this coming weekend, on Sunday in fact. But a big boost to Merkel today. Her coalition partners won in Bavaria, a key state. So that really helped boost the euro, also helped boost the DAX. Let's just take a look at the DAX there. This is the German stock market. It reached a record high on the back of that news, above 8,600, sorry. And it has managed to hold on very, very well. Now, there is one risk event that could upset the DAX's rally, and that's if the FDP, the Free Democrats, another ally of Merkel's, another coalition member, can't get 5% of the vote. At the moment, they're only polling 3%. If they don't get 5%, that means they can't be in the coalition, which means that Merkel would have to try and form some sort of grand coalition with the Social Democrats, her arch rival, if you like. That didn't work when they tried to do it back in 2009. So since Germany has really been the linchpin, or the real stabilizing force in the Eurozone during the sovereign crisis, any signs that there's going to be political upset or political concerns in Germany could really weigh heavily on the DAX. So it isn't having an impact right now, but if we don't get that outright win for Merkel and her coalition, and instead we're having to get some sort of grand coalition with the Social Democrats next Sunday, we would expect the DAX to be in a very different position this time next week. So watch out for that. But overall, it's all about the Fed meeting and, of course, the new Fed governor. Thanks for joining. Bye-bye.